Hey everyone, welcome to another episode of Small Business Stories. You've got me, Dr. LL, Loralyn Mears of Steeris here with Kunal Bhasin. He is the founder of One West, and he's got a wealth of experience, no pun intended, about financial services and securing capital. So Kunal, welcome to the show.
Thank you so much for having me. Really appreciate it.
Oh, excellent. So we're going to get into all of this, and let's just start by looking around at what is shifted with respect to access to capital.
Yeah, absolutely. I think if you look at the landscape just over the past 10 years, um, there's a lot of new players and a lot of new trends that we're seeing with our small business owner customers. At One West, we're dealing with, small to medium-sized businesses. Generally, think, restaurant, construction company, medical, retailers. These are our core clientele, and it could be multi-location or single location. But traditionally, when you think of getting a loan for your business, most people imagine walking into the bank and talking to the banker, and that's how it was a long time ago. But with the rise of this fintech area, and I use that fintech area very broadly because there's all kinds of players in there, which I'm sure we're going to get into on this call. But you have a lot of online options, a lot of digital options now, and while they can be and usually are more expensive than what the bank charges, there's a lot less hurdles to jump through. And a lot of the small business customers are opting to save the time and paying the premium than going through that traditional bank underwrite. At One West, we service both sides of it. So we work with a lot of SBA lenders on the platform, which are generally issued directly from banks. We also work with a lot of the fintech players, and we show the offers to the customer similar to how Kayak would show you your flights. You can fly first class and pay this much, or you can fly a connecting flight in the middle seat and you can pay this much. And we let the customer kind of drive that. So if the customer wants to provide the documentation that it takes for the bank underwrite, they'll see that option on their screen. If the customer wants the same day funding, next day funding option from a fintech provider, they can see that option on their screen and they can kind of compare them side by side and pick the one that works better for them.
I want to tease that out when you said show it to the customer. So I think for lenders that you really have two customers. You've got the folks, the small businesses on the receiving end who are seeking the access to the capital, but you've also got the customers, the lenders, right, who are providing the capital. Talk to us about straddling that duality.
That's a great observation for sure. I say that in meetings all the time that we have two customers. We have the small business owners, and then we also have our lending partners, and we got to keep both sides of it happy. So, lenders, when we start a relationship with a new lender, they'll generally come to us and tell us, kind of what their geographic footprint is, if they have any restriction. Some of our lenders will work with only 8 states, and some will work with the entire country. A lot of times with the local lenders, you can actually get better rates than from the national lenders because the national lenders have to price in that additional risk for that larger footprint. So all of that is built into the back end of our system, what credit scores they're willing to look at. We try to build a marketplace that works for all ends of the spectrum, whether the client is, in business for 20 years, is highly bankable, is profitable and generating a lot of revenue and has a high FICO. That's kind of the top end of the spectrum. And then also your newer businesses, maybe 6 months in business, doing 100 to $200,000 a year in annual revenue. For each of them, just because that first client I talked about is going to likely get approved for a much larger loan than the second client that I talked about, but it's a big decision for either of them, and they both need a level of service, they both need a level of optionality, and they both want what paths are available to them. What we find a lot of small business owners do is they will try to go directly to the lenders because it makes sense, right? Why would I go through this company that kind of sits in the middle? They're going to charge me something and then they're going to get me to the lenders anyways. But I understand that sentiment, but we get paid from the lenders directly. We don't get paid from the customers directly. So the lenders are the ones that are paying us, and they pay us because we provide them every month with, you know, thousands and thousands and thousands of small business owners, and we're funding a lot of deals at each of these lenders. In often cases, they'll actually give us preferential pricing for our clients because they want to win our business, and they're trying to woo us as well because we're their customer at the end of the day as well, and we're providing them a lot of loans for their balance sheet. So the lenders are actually the ones that are compensating us for bringing a customer to them. And if you go to a lender directly, one lender may have two or three different loan products. But by going to a marketplace, you're going to be looking at maybe 20 to 30 different lenders where each of them have two or three different loan products. So you have a lot more options that end up popping up at the end of that process that you can compare and pick which one makes the most sense. And to go to 20, 30 lenders on your own and submit your documentation one by one to each one is going to take, you're going to get a lot of phone calls. You're going to get a lot of questions. We help make that process easier, and that's where we sit in the market.
Got it. Now, I want to tease out a little bit more about how you treat each of the two customer types, right? You've got the lenders and you've got the borrowers. Do they get treated differently given that they have different customer journeys and experiences?
Yeah, what the lenders are looking for from us, some of our lenders are much more tech savvy, the fintech guys, and some of our lenders are much less tech savvy, the banks. And we need to deliver the information to them in whatever format that they request it in. And that's kind of the beauty of our platform. Some of them, the more tech savvy ones, the customer comes in and we can API everything over to the lender and they can decision the file within just a few minutes. Some of the banks need us to go log into a back-end portal on their end and enter the credentials into it, which we've also figured out ways to automate that process. So it streamlines a lot of this, and we need to keep both sides of the table happy. You're correct. So we need to deliver the small business owner with the options for the best rates as well as the fastest processing times and how quickly they can get their funds. So we need to make sure we have those options available for the small business owner. But on the lender side, a lender's not going to be happy if you send them, 100 loan applicants, but only one or two of them meet the criteria that they're looking for because they spend a lot of time and money and effort to decision all 100 of those, but only two of them were workable files. So we have to be very careful about what we're sending to make sure that we have a high throughput, meaning, at least half, close to half of the loan applications that we're sending, that lender actually doesn't end up approving on their end. So that way we can continue it through. Then you also don't want to send one loan to too many lenders at a time because obviously only one lender can win that file, which means everybody else you sent it to spent time and effort on underwriting it and decisioning it. Ultimately, they lost the file as it is. So we have great relationships with all of our lenders. We work very closely with them. We try to meet with them once a month in person. We're actually going to one of our lender meetups coming up here in a couple weeks, and we're excited about that. That part of the relationship is very important. And we're able to call our people that work inside of those lenders when maybe we think they've made a mistake or we need a little bit more money on a deal or we need the rate to come down a little bit. And we'll kind of do that negotiation on behalf of our small business owners as well. And the lenders are happy when our throughput is high and we're funding lots of loans with them. Then everybody's happy at the table.
Of course, right? Like it's the triple win. We all need that. Now,
Yeah, yeah.
I want to dig into a little bit about the decisioning. So decision integrity. So understood that there's a system, right, of gates, metrics, et cetera, that have to be overcome, right? Each one hurdled over before the lender decides, hey, borrower, you are worthy of using our dollars, our credit, our capital.
Right.
That I understand. On the front side of it, I can understand too where the small business goes, ah, yeah, I've got some expansion, something coming, so I'm going to need more money. How do you get discovered? So I'm interested in that part of the decision making. If I go on and I'm just Joe average person, I need money, I need a loan, then you're going to end up with, the personal folks, and that's not what you work on is personal capital. But if I'm a
Right.
business owner, I don't say like, do I say I need a business loan and then like, oh, One West comes up because you've spent a lot of money on Google ads and keywords, and then I go with you. I mean, what's that decisioning process like?
So that actually, we have a lot of referral partnerships in place, and most of these are like you'll find us featured on Forbes, for example. But separate from Forbes referring us business, a lot of lenders themselves refer us business. So think of a bank. Um, we work with over 75 banks that refer us business, but a customer walks into a branch and says, "Hey, I need a business loan." and the bank can't help them because a lot of times the bank can't help because it doesn't meet the underwriting criteria, it doesn't meet the guidelines. For whatever reason, the bank can't help. But what the bank immediately starts getting worried about is now this customer is going to go somewhere else. Somebody else is going to approve him. He's going to move his checking account. He's going to move his payroll account. He's going to move his credit card processing account. And we're going to lose all these other revenue streams. So at One West, we promised the bank referral partners that we're not going to move that stuff. We're just going to help the customer get the loan and find the loan. So a lot of these banks are actually referring those businesses to us saying, hey, One West, we can't help ABC, but you help ABC, and then you can get them the loan and we can keep all of the other business streams we have going on with ABC. So banks are a big referral partner of ours, and a lot of the fintech players are a lot of big referral partners of ours, where they maybe can't place the deal on their own balance sheet, or maybe they can't get pricing good enough that the customer is going to accept it from them, but they still want to help the customer find that financing. Um, and then sometimes, like when in the bank's cases, there is no revenue splits with them because they just want to keep those other revenue streams and get the clients from us. And then sometimes we do, if the lender pays us X, we'll pay a portion of X back to those referral partners. So our direct marketing channel is currently a small channel, and we do have plans to increase that, but we get thousands and thousands of applications from referrals from other lenders, other financial institutions, other fintech players, and a lot of online affiliates like Forbes.
Now, to be honest, I figured that was probably the case, right? But I wanted to come at it because a lot of folks we have on the show are focused on marketing and keywords and SEO and GEO and all of these systems that are shifting our discoverability
Yeah.
online, right? What we say, how we say it, where we say it, all of that sort of stuff is being synthesized by AI systems that most of us don't even understand. And we're being categorized. Yes, thou art worthy and thou shalt proceed, or no, thou art not. Right. And then we're dismissed. Right. We've made invisible. So that's why I think I felt it was an important question. All right. Let's talk a little bit about how capital itself represents something more than money, right? For the owner, the team, the community. Because as you said, so many traditional banks, and I've heard that the number is increasing of numbers of loans that are declined, they walk out of there and go, right, I'm declined again. So what does capital represent to these entrepreneurs? Like I said, owner, team, community, all of that stuff.
You and I spoke about it a little bit before we hopped on the air. Small businesses are generally defined as companies that have less than 500 employees and less than $20 million in revenue. But a 400-person company with $15 million is a pretty big business. It's not your corner store. It's not and banks, especially the big banks, have so much red tape and so many steps and so many people that need to look at a loan prior to it being able to fund. And it can take multiple weeks, sometimes multiple months. And you can get all the way to the 1 yard line, and then the loan can end up getting declined at the last minute. And that is very painful for the business owner, for sure. But it's also very painful for the bank because they put a lot of money into that process and man hours. So because of that, banks don't want to do a $40,000 loan because they can't. It still needs the same amount of eyeballs and the same amount of hours and the same amount of contract prep on a $40,000 loan as a $4 million loan. So if you look at the average loan sizes from a lot of these larger banks, you're going to see that they tend to be in the mid six figures, which is a large loan for many. And capital represents, and it's something that historically from the banks, from everything I'm telling you, has only been available to some of maybe technically defined as small businesses, but how most people would define a larger business. By that definition, One West would be a small business as well. We're about just shy of 100 employees currently. So all that being said, capital represents optionality and the ability to take advantage of situations and opportunities as they present themselves. 40% of the financing that One West facilitates today is in the form of a line of credit. So the customers don't even draw the money today. They just have it available in their app or online. And when the opportunity presents itself, they can log in, draw it, and either within minutes or the next day, that money shows up in their account. So it gives them a lot of flexibility to negotiate on the, we don't do personal loans, but think about it when you're buying a house. When you can show up as a cash buyer, it opens up a lot of options that might not show up if you say, let me go work on this and I'll get it together for you.
Let me sell my house first and get
Yeah.
a loan, and then I'll come back to you. And meanwhile,
So
the
having the
deal's long gone, right?
availability of that capital and a relationship with the lender gives you a lot of power. It gives you a lot of negotiating power and it gives you a lot of maneuverability and flexibility.
I want to go back to something you just said in your last explanation that I think it's a really important insight. What I see happening with a lot of entrepreneurs, service providers, et cetera, they're not sticking with the small, the nano businesses, micro businesses, because as you said, it takes the same amount of work to work them through the process, whatever the steps are to onboard, to verify, decisioning, whatever it is, to service. And
Yeah.
then the chance of getting money at the end of that is lower because the micro businesses and small businesses are financially volatile. And then it's all that extra pain. And I've seen this a lot too. Those micro businesses, a lot of them have champagne taste, but beer budgets. And so you try to work through that and you can't get there. So people are saying, yeah, you know what? We're just going to work with the larger businesses because it's the same amount of effort. But what happens to all those ones left behind that are too small?
Yeah. So that's why it's important to work with the right marketplace. You know, where it gets interesting is we within our we internally refer to it as our waterfall of lenders. If you are that earlier example of the 800 FICO, 16 years in business with $15 million in revenue, a very prime, a fairly decently sized business, of course, everybody in the waterfall is going to approve you. But if you send that customer to a lender who approves customers with 6 months in business and 500 FICO, the rates are not going to be palatable for either side. They're going to be like, wait a second, why is this so expensive? So knowing which lenders are the right ones for whether it be a micro lender, maybe you have a challenged credit history, or maybe you have none of that and you're a perfectly prime customer. There's different lenders for each of these pockets. And that's why for us, our waterfall is so important so we can service the wide variety of customers that come our way from our referral partners. But as an individual, you may not know that. There's, dozens and dozens and dozens of lenders in our waterfall. I would say maybe 8 or 9 of them are fairly decent household names, but the others are not. They're not lenders you would just, oh, I know those people. It's not, it's just not the case.
That really does a good job of queuing up my next question, which is all about ethics and responsibility, right? So you've created this marketplace. It moves fast, it fills gaps, right, that are left behind by banks. But how do you balance all that speed with responsibility, especially when you know that financial decisions on the other end, right, that decisioning process you've spoken about several times so far is going to have a deep impact on people's lives and their livelihoods?
Yeah, I think it all comes down to transparency. We're not the only ones that do what we do, help customers shop and compare business loans. There's a lot of players in this space. And I mentioned earlier that the way that a marketplace or a broker should get compensated is getting compensated from the lenders directly. That's the right way. That's the ethical way. Unfortunately, a lot of marketplaces and brokers, rather than presenting the best offer for the customer, will present the one that pays them the most amount of money rather than the one that necessarily works best for these small businesses. So we take ourselves out and we just show all of them. Here's all of them side by side. We let you filter, we let you sort. You can sort by highest dollar amount, you can filter by payment frequency, you can look at it for loans that have a duration longer than a certain time period or a payment lower than. So you can really tinker and tailor with it until you get to this is what my business needs, this is what I need, and then we'll walk you through the journey on how to get to that loan into your bank account. So we stay agnostic in that process and we don't let what we're receiving as revenue from the lender play a role in it. And we have, we're talking so much about our automation and our technology, but we have about 45 salespeople on the team also. So when customers have questions, they can click, they can talk to somebody. If they need more information, they want to know something that maybe wasn't shown to them in the portal or they didn't understand in their contracts. We have a large customer service team here to help them and help guide them through to make sure they're making that right decision. But if a customer is going through happily on their way, we'll allow them to go through on their own. So there's no high pressure sales. You're not going to get 50 phone calls from us like some of our a lot of small business owners tell us horror stories. I filled out a form somewhere and now my phone won't stop ringing and it's driving me crazy. And I know how annoying that is. I like to do things on my own online, and we give both options. If you want to talk to somebody, we're here, and if you don't, you can do everything by yourself.
Fair enough, right? And so you wholly leverage automation and data, right, to enable funding decisions on both sides. So, what have you learned about human behavior, trust, risk, urgency, all this stuff by watching how small businesses who have come to you seeking loans are interacting with your technology?
I think that's the, I can't tell you how many customers come and say, I want to build a relationship with a company that will help me on this fine. Small business owners are optimistic people in general. That's why we start small businesses. And that's why we go through this painful process of growing these small businesses. So small business owners come with a certain level of optimism naturally, but they want to build relationships and they have big aspirations and big plans and big dreams. They don't necessarily only want to talk about the funding that they're getting today, which might be micro, might be small, might be medium size, but they have plans and they want to know that they're with a partner that can grow with them into those plans. And it's another area where I think marketplaces have advantages over the direct lenders because the direct lender may not be able to, while the marketplace can say, well, let's shift this from here to here or vice versa. So, um, that's one thing I learn a lot about our customers is that I love hearing what they plan on using the money for and what comes after. And when we get updates from them, I love that even more. And you would think when we display offers side by side, if you took a poll from your audience, they were probably 95% plus. You would think customers just pick the one with the lowest rate, but it's not. It's often the fastest who can get me the money today or tomorrow. It's often who can get the most amount of money. It's not, it doesn't, yeah, about 45% do click rate, but the other 55 is really spread out across
Mm,
a lot of different reasons of what they're using the funding for.
that's interesting. I like that. I like data like this. I didn't expect that. So that's what kind of makes it fun.
Yeah, yeah.
Where you were
So
going, sorry, go ahead.
this is what we look at a lot internally. And then that also drives when we, you know, do we need to add another lender to the platform? Do we need to add maybe a higher, longer term lender or maybe a lender that's more aggressive in loan amount? So we look at where those clicks are going, and that kind of dictates what we do on the waterfall of lenders and if we need new relationships or not.
All right. When you were talking about how your salespeople interact and building the relationships and all that importance, what you didn't say, but I kind of heard was transparency and trust, right? Those are core to your brand promise. But you're in an industry which is associated with fine print, complexity, scams, right? All this sort of stuff. So, how do you lead your team and how do you train them to redefine and share with customers what transparency actually looks like in practice? Do you let the data speak for itself? What do you do?
No, so most vast majority of our customers are, even if they're on the phone with a One West salesperson or a customer service agent, we're asking them to log back into their One West portal to accept the offer. When they accept the offer, we actually summarize the contract specifically from that lender and give them the high level details, how the prepays work, how the fees work, if there are any. We try to give it to them in plain English, not legalese, kind of here's what comes next, and know what you're getting into. When is the money going to show up? Because customers, they all have lots of questions, but they often have the same questions. So we know what those questions are. How does this work? When do I get the money? How much is it going to cost? What are the fees? Anything. So even though, yes, the lender is going to send a contract, the contract can be long, the contract can be overwhelming. We encourage our customers to review it carefully with our sales agent. We encourage our customers to review it with their CFO. these days, what most of them do, and we encourage this too, is upload it into ChatGPT or one of the AIs that they're using and get all the questions that you can from that process as well. But we also do our best to summarize it, and all those key questions that are often asked, we show it right there to them in their portals. So we try to be as transparent as possible because we don't want a customer that just comes and does one loan from us and then we never see them again. We want to see a customer. We have some customers that have renewed with us 15 or 16 times by now.
Mhm.
Yeah,
That's
and
amazing.
that's a good
So yeah,
long-term
that's
for
it
us.
is because like you said we all know the cost of click, right? How do you get that customer into your funnel and into your system initially? And then it's so much easier to nurture an existing customer and have them buy again versus starting fresh, right? And getting a new customer. That said, you've worked with hundreds, thousands really, of small businesses. What does success really look like? And when should a founder walk away from the chase?
Oh, that's a tough one. I think success is defined differently for everyone. Some will say when it's enough, you have enough money to take care of your bills and take care of your family and take care of your needs. Some will say, part of being a small business owner, especially once you've had some levels of success, it's about winning the game, as you could so call it, right? You're within an industry, you're playing against your peers. Everybody's trying to take market share away from everybody else. Everyone's trying to grow their businesses. Um, so success is defined differently for each one. I would give the tips I would say is borrow, if you're going to borrow capital, do it for opportunity, not out of desperation. That's an important fact as you're building towards success. We've seen, we've talked about all the success stories, but sometimes you see, you know, if you're having problems making a payroll, that's probably not a good use case to go get a loan because you're kicking a can down the road. But if you're borrowing, I'm getting a discount on inventory if I buy it by the end of this month. That's a pretty good use case for working capital because you can use that money. You're going to get inventory at a discount. You're going to increase your margins. You're going to drive in more clients. That creates long-term growth for your business. So if you're using the funds to create additional opportunities for the business, is how we usually advise our clients when and how they should take financing or even potential outside investment. So and success, some people will say success is upon the exit. Success, not for everybody. We have a lot of small business owners that build beautiful small businesses and they step away and appoint a different CEO, and that business continues to generate cash income for them and may not be front page of Wall Street Journal, but it's a nice little business that somebody built and it creates and provides for their family and it small business is a beautiful thing. Small business will continue to be the backbone of the US and I don't see that changing anytime soon.
No, so true. And that said, as we're nearing the end of our show, how can people find you, Kunal?
You can find us at onewest.com. It's the number one, WEST.com, or you can call us at 888-88-1West. So those are the two easiest ways to find us. And our team you'll be able to guide yourself through the process, or if you need our team to reach out, they'll reach out to you, and they're great to deal with.
Okay, one more question before we wrap up here.
Totally.
So, Kunal Bhasin, if we looked in your closet, and I believe you're Manhattan, right?
Office, yes.
Yes, yes, okay. And I'm on,
Jersey, Manhattan office.
it's fantastic. I'm on the other side of the Hudson. Yeah, yeah. The Jersey
Okay.
side. Yeah, yeah. Okay, yeah. Anyway, that said, if we got to look into your closet and there was a pair of footwear, shoes, boots, whatever, that personified who you, Kunal Besson, are and represented your personality, your brand, you, what are we looking at and why is that you?
You're going to be looking at a comfy pair of sneakers. I'm in the city too often and I'm on Zoom all day, so nobody sees my bottoms very often. So you'll find a comfy pair of Nikes that I walk around with and walk around the office with and interact with the team with. I can't do the dress shoes anymore. It hurts my toes now.
Same. I gave up the stilettos a while ago. They hurt. They
Yeah.
hurt.
I introduced them now. So
Well,
Zoom
there we
has,
go.
Zoom has certainly helped with that.
Oh, fantastic. Right. This is about it. We've all learned something from all of that. So, anyway, with that, Kunal, it's been a pleasure having you on the show. Thank you for talking to us about accessing capital and what it means to really work through a broker, a marketplace that helps people make decisions, based on data and access to information. So, thank you for that.
Absolutely. Thank you so much for having me.